Hi everybody, I just wanted to go over this with you. For this add or drop a product line, I've inserted some subtotals. I have a contribution margin subtotal, which is a good review. It wasn't necessary, but it's a good review to focus on sales minus variable costs gives you contribution margin. For add or drop a product line, we also want to consider avoidable fixed or traceable fixed. Those are fixed costs dedicated to that one product line. So this is the fixed cost dedicated to Rosemary, and nobody else shares that fixed cost. So if you get rid of Rosemary, whatever that equipment is, depreciation, whatever that activity is only done with Rosemary. And so if Rosemary is discontinued, that goes away. Same thing here, that 150 belongs to Basil. As long as you're doing Basil, you're incurring it, but if you're not, that portion of fixed costs will be eliminated. So we come down to here, product margin, which tells you how much profit that product line is contributing to the common fixed or to profit. Here they both have a positive product margin. This is ignoring the common or the allocated fixed costs. Some firms don't even allocate that. We can put that in here. It would be kind of in the total, 135 plus 170. So we can get what was the net operating profit with both of them. So we can add those together and get the contribution margin should you want to do that. I like to do it because it's just good form. And so if we then took that product margin and subtracted the total common fix, we would get a loss of 60,000, which is, you can sort of visually see that if you took both of those product lines together, you'd have a loss of 60,000. And they then are thinking about eliminating Rosemary. So what would it look like if they eliminated Rosemary? So what would it look like if we eliminated Rosemary? So let's take Rosemary out. So sometimes they just want to know the differential or the disadvantage of a particular thing. In that case, it would be that you lose the 95. You lose the sales. You lose this variable cost and you lose that avoidable fix. So you lose 95. But here they're not asking that. They're asking if you eliminate Rosemary, what is your net operating income? So in this case, it would be a loss of 155,000 overall. Let me know if you have a question.